Hi, everyone. Thank you for joining our webinar. We will give it a few more minutes for others to join, and we'll start at 3 minutes past the hour. Right. Hi, everyone. So we've got a few more people on the line here. Welcome to today's webinar on the state of the mobile money industry in Asia. And so my name is Simon Anderson Manjang, and I'm the data manager at the GSMA's mobile money program. But today I'm taking a bit of a step back from the data, and instead you'll be hearing from my colleagues Nika Nagavi and Kavita Taylor. So for those of you who don't know, Nika Nagavi is our Director for Data and Insights, and actually the lead author for this year's State of the Industry report, which we published back in March. And Kavita Taylor is our data analyst, or one of our data analysts, who has been a key part in the production of this year's State of the Industry report. And of course, she's focused particularly on the trends in Asia for this presentation. And I guess a bit of a caveat before we start, well, this data is based on the collected. Well, the report is based on the data collected in 2019. So, needless to say, that was before the COVID-19 outbreak, and as such, the data will not be reflecting the subsequent impact of COVID-19. We will, of course, look closer at that for next year's report, which is coming out in Q1 2021. And I think to be honest, it's a bit too early for to have a conclusive view on what the impact of COVID-19 has been, at least on a global and on a regional level when it comes to mobile money. I guess we have, I should mention that we do have recommendations for central banks on the website, on our website. You'll find links towards the end of the presentation. And we also have a sort of a tracker of what measures have been taken to combat or with regard to COVID-19, I'd say. So let's not maybe dwell too long on this. Some housekeeping. There will be a recorded version of this webinar online afterwards. I believe you should also be sent a link. If you have any questions during the webinar, please drop them in the Q&A box, and we'll try and answer as many as possible after the main presentation. I guess I should also mention, if you're having for some reason issues with the Q&A box, you can always email us at mobilemoney@gsma.com. So I think with that, let's dive in. Just to give you a bit of context before I hand over to Kavita first, we'll have a bit of a look at what's been happening in 2019 in sort of more of on a global level to contextualize what we're seeing in Asia. And as you can see, this was the year when we reached this huge milestone, over 1 billion registered accounts now in mobile money. And we have over, at this point, 290 services in 95 countries. And again, you'll see some of the other metrics here, 22 billion in circulation, and the fact that most transactions on a global level are now digital. But without further ado, I'll hand over to Kavita to drill down into Asia a bit. We can't actually hear you yet.
Here you go.
Kavita.
I think, Alice, if you can turn Kavita's camera off because she's presenting, and turn her audio on as well. Sorry, guys. In an ideal scenario, we would have all been in the same room doing this, but COVID has its own challenges as well. Thank you.
Great, thanks, guys. Yeah, thanks, Simon, for the introduction, and hello to everyone on the line. Just like to say another thank you to everyone that's taken the time out to come and join us on the webinar today. So yeah, I'm going to dive straight into some of the key trends that we've seen across the Asia region over the past year, so spanning from 2018 to 2019. So looking at one of the core metrics that's used in mobile money industry of accounts, one of the key observable trends that we saw from 2018 to 2019 was the 10% growth in registered accounts in Asia. So this 10% growth specifically led Asia to host now a sizable figure of 473 million registered accounts. So I guess while Sub-Saharan Africa is commonly turned to as kind of the epicenter of mobile money, considering that's kind of where it really took off and managed to scale quite rapidly, Asia, in fact, currently matches Sub-Saharan Africa's share of global accounts and now makes up almost a half of all registered mobile money accounts globally. So yeah, as Simon just mentioned, one of the major milestones that the industry saw in 2019 was the breach of 1 billion registered accounts. And Asia, in particular, as a region, contributed quite heavily to this milestone, adding 42 million new registered accounts, which was in fact almost half of all of the new accounts added globally. So if we take a bit of a further look at the breakdown between the two sub-regions in Asia, we see that East Asia and Pacific was in fact clearly the more dominant market, adding a total of 30 million new accounts to the region overall. In fact, when looking at it on a global scale, East Asia and Pacific added the highest number of registered and monthly active accounts amongst all other mobile money regions. In comparison, its counterpart South Asia added a lot fewer accounts, totaling of 12 million new accounts over the past year. So The region's growth over the past year, it was partially hampered by the Indian market in particular, where last year in 2019, unfortunately, a lot of the larger mobile money players in the market, M-Pesa, Vodafone, Aditya Birla Payments Bank Wallet, for example, had to close down their operations due to just an increasingly complex and burdensome regulatory restrictions and just a difficult operating environment in general. So the figure that we've just covered, so the 30 million accounts that was added to East Asia and Pacific region. So this significant number of new accounts added, it was driven primarily by new and in general more innovative market players. So over the past 5 years, large interest has been drawn to that region in particular, Southeast Asia in particular, particularly by these fintech players and larger tech giants. So over the past 5 years, it's kind of led to the launch of a few new, more fintech-led models. For example, GoPay, OVO in Indonesia, and GrabPay in Malaysia as well. So looking at the chart on the left-hand side, we can see that in East Asia and Pacific, the number of services has definitely increased quite significantly over the past 5 years, going from 32 in 2014 and 52 in 2019. Again, South Asia, it has dropped just ever so slightly over the past 5 years, but again, due to increasingly complex operating environments, has closed several services to shut down. But if we have a look over here at the figures on the right-hand side, we can see that while despite South Asia adding fewer accounts over the past year, it still in fact secures double the amount of accounts in the region, holding a 30% share of total registered accounts in Asia. So in comparison, East Asia and Pacific hold just 15% of the share of total accounts in Asia. So this kind of just gives us a better idea of like the different weighting between both sub-regions and how both contribute towards the overall region in general. So if we kind of take the growth that we've seen in Asia and the number of accounts the region currently has in the region, and we kind of apply that to the population context in Asia, so to see how many people mobile money is effectively reaching in the region, we can definitely see that mobile money is reaching an increasing number of people. So in 2019, in South Asia, almost a quarter of South Asia's adult population has benefited from mobile money, in comparison to just 4% in 2014. Similarly, in East Asia and Pacific, in 2019, 32% of East Asia and Pacific's adult population was reached by mobile money, in comparison to just 6% again in 2014. So I think kind of taking the information on this slide alongside the rise in the number of mobile money services we've seen in Asian markets, that alongside how many people it's reaching in the region just goes to show that increasing customer awareness and the increase in the number of deployments, Asia has made significant headway in reaching the unbanked population. So if we continue to focus on the accounts in the region, but just taking a bit of a closer look at the account activity and how that's evolved over the past few years. So from the graph on the right-hand side, it's clear to see that the number of active 90 accounts shown there by the orange line, it has steadily increased over the past 8 years, where the account activity rate as well, shown there but in the top by the green triangles, the account activity rate has also almost doubled over the past 8 years. So as discussed previously, there was quite a significant drop in the accounts in South Asia due to regulatory restrictions. So this kind of becomes a bit more evident when we look at the kind of declining slope between 2018 and 2019. I think another thing that's quite striking about the graph here is just how large and how persistent the gap is between the active 90 accounts and the number of registered accounts. So despite the wide gap, I think it definitely highlights the extensive opportunity for the players in the Asia region to kind of pull in more of their registered customers and make more effort in trying to convert those registered customers into more frequent mobile money users. So this graph essentially captures the average activity rates within the region. However, it is again also important to highlight the number of services in Asia which has made progress in terms of active accounts. So currently, 30 deployments now have over 1 million active accounts, and this is 90-day active accounts, in comparison to just 7 in 2014. Also, if we kind of compare the 90-day account activity rate of Asia, which sits at 32%, with what we see on a global level, which has an account activity rate of 36%, it's clear that there isn't actually a huge difference between both of these figures and what we kind of see on a global scale, which we often use as a benchmark point. So I think it's just important to highlight that whilst opportunities still exist in the region, there are still a handful of services in Asia that are overshooting the general averages that we do see. So, as you may know, agents have played a crucial role in the mobile money industry from the get-go, providing more prevalent touch points for customers and increasing customers' accessibility to common financial services. So in Asia in particular, agents still remain the main gateway for digitizing cash. So just some key statistics which go to support the statement. Currently, Asia's agent network comprises of 4 million registered agents. These agents in 2019, they were able to digitize $43 billion of cash, which is actually a quarter of the value digitized globally. The average agent activity rate in the region just sits below what we see on a global level by 1 percentage point. So in Asia, we see 53% and activity, and globally we see 54%. So again, it's not a huge difference to kind of what we use as a benchmark kind of figure. However, if we go dive in a bit further, going into the sub-regions in Asia, we'll find that, in fact, East Asian Pacific has an agent activity rate which is higher than the global agent activity rate, as it sits at 61%. So there is quite a big discrepancy between the agent activity in both South Asia and East Asia and Pacific. So when we look at the progress Asia has made in terms of transactional values, this has really proved to be significant over the past few years. So firstly, Asia has managed to double its share of the value of all global mobile money transactions over the past 6 years. So what that means, it currently holds a 30% share of the value of all mobile money transactions carried out in Asia. So again, from the graph on the left-hand side, we can also see that heavy gains have been made year on year in regards to the total value of mobile money transactions. So in 2019, Asia transacted a total of $204 billion through mobile money. So I'm going to hand over to my colleague Nika now. She'll take you through more of the digitization story behind Asia. So Nika, over to you.
Thank you, Kavita. I hear
a bit of echo, so it's fine now. Sorry. Thank you, Kavita, for taking us through the growth and scale of the industry across Asia. Now, let's have a look at the evolution of the digital ecosystem. For those of you who attended our first webinar on State of the Industry Report, you might recall that one of the key stories we highlighted, and Simon alluded to this as well, was that for the first time, digital transactions represented the majority of mobile money flows globally. So let's see how the digitization story has evolved across Asia, a region where traditionally was quite cash heavy with high OTC usage. Overall, as you can see on the right-hand side, the share of digital transaction values has grown by 5-fold since 2015. And digital transactions now represent more than 30% of the overall transaction mix across the region. If you look at the left-hand side, the bar on the left-hand side, you can see this is compared to only 7% in 2015 Despite this impressive growth, a significant proportion of transactions across the region are still cash-based, i.e. cash in and cash outs, or conducted over the counter where an agent performs a transaction on behalf of the customer. Just wanted to also highlight that we've seen a slowdown in growth of OTC transactions in the past few years, and in parallel, we've seen an acceleration in OTC to account migration. That said, OTC transactions are still quite prominent in markets such as Pakistan, Cambodia, and Myanmar. Just wanted to also caveat that we are now seeing a bigger push for digitization and OTC usage migration in light of the COVID-19 pandemic. So we assume that the growth in digitization across the region will continue in 2020. Next slide, please. So now let's have a look at what's driving the digitization story in Asia in the next couple of slides. Similar to the global trends that we covered during our earlier webinar, mobile money industry in Asia is becoming increasingly integral to the financial ecosystem. In half of the markets across the region, customers can transfer money between accounts held with different mobile money providers and with other financial system players. Mobile money to bank account interoperability has grown significantly across the region. In fact, the value of flows to and from bank accounts grew by 28% in 2019, representing a greater proportion of money exiting the system. This obviously suggests that mobile money is complementing the formal banking sector, whilst also meeting the needs of entirely new customer segments, including traditionally underserved and cash-reliant users across the region. So in addition to interoperability with banks, Mobile money account-to-account interoperability is also expanding in the region with 6 live interoperable markets as of December 2019. Next slide, please. So we're still on the digitization story and continuing on this digitization story, increased partnerships with banks and also seamless integration with third parties through APIs are proving to be instrumental in the pathway towards a cashless society in the region. I know we covered interoperability with banks in the previous slide, but what's striking here is that on average, mobile money providers with bank integrations are connected to 27 banks in South Asia and 16 banks in East Asia and Pacific. Both of these figures are above the global average of 13. Also in South Asia, on average, providers are integrated with over 15,000 merchants, which is significant compared to the global average figure of 13,000. What we can see here is that also the region is lagging behind when it comes to integrations for bill payments and bulk disbursements. And we see a huge potential there for providers to grow the ecosystem of partners from government agencies and humanitarian organizations to utility companies, agribusinesses, etc. Just want to highlight why seamless integrations are so important for the industry. Obviously, providing seamless integration via APIs expedites the partner onboarding process. In addition, this will allow local entrepreneurs and startups to focus on building innovative products and services for niche demographics. For actually ecosystem service providers and other third parties who might be listening and are on the line and who are interested in creating technical ready solutions for integrating to mobile money providers, you can use the GSMA mobile money API as one example of a mobile money API. If you're interested, please let us know and we'll be happily put you in touch with our colleagues at the GSMA Inclusive Tech Lab. If we can go to the next slide, we will talk about another key story that we highlighted in our previous webinar. And it's around the fact that for the first time, more value is circulating in the mobile money system than exiting globally. So looking at the Asia, we can see that almost twice the amount of value is circulating in digital form than leaving the mobile money system. This is a signal of the growing relevance of the industry in the region. So looking at the chart on the left-hand side, we see that majority of, actually the chart in the middle, we see that majority of the 8.6 billion in circulation are P2P transfers, with merchant payments only representing less than 6% of the circulating value. As highlighted during our previous webinar, so we estimate that a substantial proportion of these P2P transfers are made by small businesses and micro entrepreneurs. Nonetheless, what's key here is that the value in circulation is significantly surpassing what's leaving the system. And the digitization story is there. This value in circulation never leaves the system in cash, it remains in digital form. So if we go to the next slide, so obviously what we mentioned was that while the amount in circulation is still largely driven by P2P transfers, as what we see is that there has been significant progress in bridging the gap between offline customers and online merchants. Asia is one of the only regions where online merchant payments account for the majority of the total retail payments. In fact, 80% of the merchant payments in the region were made online, and this accounts to 75% of the total value of merchant payments across the region. What's important to highlight is that the region has also made a faster transition towards adopting QR codes as an acceptance technology for retail payments. Obviously, this is quite impressive in comparison to other global peers, where we see USSD still is their dominant channel for merchant payments. Obviously, both of these trends that we mentioned here, the first one being that majority of merchant payments are done online, and the second one being around QR codes, basically having a faster adoption across the region, are driven by increased mobile internet and smartphone adoption across Asia in general. So if you can go to the next slide. Thank you so much. So looking ahead, we see three key areas of future growth for the industry across Asia. Mobile money enabled adjacent services such as credit, savings, and insurance are still much nascent across the region. We see a huge opportunity there for mobile money providers to bridge this gap and offer solutions tailored to the needs of low-income individuals and households, helping them build resilience and enhance their financial health. Obviously, depending on the product, offering such services require partnerships with deposit-taking institutions, licensed lenders, underwriters, and technical service providers. There's one caveat here is that depends on the licensing that the mobile money provider holds. Also, the second area that we see, which is quite key to us in mobile money team and also in the broader mobile for development team, is that mobile money has the potential to increase financial inclusion for women and close the gender gap in access to financial services in low and middle income countries. To explore consumer awareness and of mobile money and reasons for not owning a mobile money account, last year we added a new set of questions to the GSMA Intelligence Consumer Survey, which was conducted across 14 low and middle income countries. The research showed that women are significantly less likely to be aware of mobile money than men. However, what's interesting to highlight here is that the awareness gender gap was the widest in Asian countries. So we see a huge potential for increasing the awareness of mobile money as a channel for accessing financial services across the region. Last, but definitely, sorry, Simon.
Yeah, no, sorry. I just wanted to jump in because I think we have a slide on the awareness of the sort of gap in awareness regarding mobile money in the appendix, which I guess we could we can jump into later in case you want to expand on it. Sorry to interrupt.
Yes, exactly. No worries. Actually, it's a great interruption. Actually, so for those who want to have a look at this research piece that we've done in collaboration with our colleagues in the Connected Women team. So we looked at both the awareness gender gap and also the barriers for owning a mobile money account. We didn't see any gender gap in the barriers, but we saw that the awareness gender gap was the widest in Asia. And some of the markets we've highlighted here compared to some of the more known and seasoned East African or West African countries as highlighted on this slide. We've covered this in our State of the Industry report in the last chapter. So if you're interested, we can have a look at that, and we're happy to answer more questions when it comes to that. Focusing on the third, which I mentioned last but not least, area of opportunity that we see across the region is that basically international remittances present a sizable untapped opportunity in the region. Despite international remittances being one of the fastest growing products in Asia, only 85 million out of the 35 billion formal remittances flows in the region is captured via mobile money. So this is due to a confluence of factors, but what we see is that less than 40% of mobile money providers across the region offer international remittances. When you look at whether the inbound versus outbound, we see 34% of these services offering inbound international remittances, and only 16% offering outbound international remittances across the region. Obviously, COVID-19 is putting a bit of urgency on digitizing international remittances. The World Bank has forecasted that the flows of international remittances will be basically lower by 20% in 2020. And now it's more critical than ever to digitize international remittances, and we see mobile money as one of the most effective channels for doing so because of the so many benefits such as faster, safer, and cheaper remittances that are available via mobile money. So in conclusion, in 2019, mobile money services made important headway in Asia, with successful providers diversifying their mobile money proposition to stay ahead and to remain competitive. This growth and scale precedes the COVID-19 pandemic, but also shows the potential role that mobile money can play in mitigating the economic and social impact of the ongoing crisis. As Simon mentioned, stay tuned for the 2020 State of the Industry report, where we will dedicate a great focus on this topic. Thank you so much for listening till now. I now hand over to Simon, over to you to see how many questions we got in the box.
Perfect. Thank you, Nika. Great. So yeah, we do have a couple of questions here. We had one that a few people have liked, actually, which was just regard to whether or not this recording will be shared. It will be shared afterwards in an email. And with regards to content, we have one question asking what are the main digital payments in South Asia? Maybe that's something for you to take on, Kavita.
Yeah, I think Kavita.
Yeah, we've actually got some information on that in the appendix as well, so I can just take you through to there. So yeah, this kind of gives you a bit of a better breakdown when it comes to the number of transactions as a breakdown in South Asia and the value of transactions as well. So just looking at South Asia alone, we can see that just over 50% is still constitutes of airtime top-ups. This is just slightly more than what we see globally, and quite a significant lot more than what we see in Asia and Pacific. But it's good to see that it is transitioning into more kind of digital products where bill payments almost constitute 15% of the total volume mix. As well as that, merchant payments and bulk disbursements are evolving as well, where bulk disbursements almost make up 10% of the value of the transaction mix in South Asia. So, I mean, originally, like, services and markets do tend to kind of take some time to move away from airtime top-ups and P2P transfers as well, which again, over a quarter of South Asia's volume mix are P2P transfers, but it is still clear to see that the region is shifting away and kind of entering more complex and digital products, which in turn will bring them more value when looking at the value transaction mix. I hope that answers your question. If anyone has anything to add.
Great
answer.
Thank you,
I think some of the attendees are contacting me via WhatsApp saying that they have difficulties posting questions. Oh no, so we have another question actually from Vibor Jang, and another one from Andrew.
All right.
So yes, yeah, perfect.
Oh wow, it's a backlog there apparently. Sorry, yes. So then let's take on this question. We have a question from Vibor Jane here. Which are these 6 markets which are account-to-account interoperable?
Right.
Vita, if you don't mind, I can take that on, or would you like to?
Yeah, no, go for it. I just put you back to the interoperable slide. Yeah.
Yeah, so as of 2019, we have India, Indonesia, Pakistan, Philippines, Sri Lanka, and Thailand. I hope that answered your question, Vibor.
Great. Then we have another question saying, asking, does the study also look at the impact of G2P payments in the realm of mobile money, for example, in India?
That's a very good question, actually. So basically, if you go back to the digitization slide, we didn't really focus only on one market or on one use case per se. What we see increasingly is the partnerships with governments, with humanitarian agencies. But as you highlight G2P, I covered it during my remarks as well. We see a bit of untapped opportunity there. So Asia is a bit behind in terms of partnerships with government agencies and agencies for bulk disbursements, but we haven't focused on India specifically or on G2P in India. So I hope that answered your question.
Great. And then we have one actually by is mobile money expanding into new markets in Asia?
I'm happy to take.
Sorry, yeah, maybe I should direct them. Yeah.
So yeah, we did see a few new launches in 2019. So I think around 4 new services that were launched based in Indonesia, Bangladesh, Vanuatu, and Myanmar. When it comes to new markets, in fact, all of these markets were already existing mobile money markets. So although we're not seeing new markets being brought into the region, I think this is actually also a good sign, as when we look at the markets that we do work with in Asia, just goes to show that mobile money has spread across most of the markets in Asia, and that it is like a widespread service. So although we don't see new markets emerging very so often, it's a good indicator that most of the market is saturated by mobile money.
Great. So we just have one more here saying, you mentioned that it's too early to talk about the impact of COVID-19. However, what early trends have you seen regarding the increase in use of digital payments / mobile money? Nika, do you want to take that on?
Yes, yeah, I think that's a great question. So what we've seen, and Simon mentioned in the beginning, is that our team has done a set of recommendations for central banks in light of COVID, but we've also published a COVID tracker. Our colleagues who are on the line, Sakshi and Kennedy, were the leads for that. So what we've seen is that a lot of providers in collaboration with governments are basically relaxing the KYC requirements. Transaction limits are being increased. Transaction fees are being waived as well. All of which has helped the digitization story. Again, as Simon mentioned, it's too early for us to be specific region-wise and globally to provide a good picture, but I see COVID as a basically catalyst for digitization because a lot of heavy cash usage across the region and globally is due to users being really to the stickiness of cash and users not wanting to change their behavior. Obviously, the pandemic has put a bit of urgency on that, and everyone is cautious of handling cash. So that would be very high level, but let's to see the nitty gritty and how that is going to be different region by region. It's too early, and we'll keep you posted on that for the next version of the report.
Great, thank you, Nika. I should say also, as you can see, we have our email address here and our Twitter handle as well. If you have questions that pop up in half an hour or tomorrow even, or at any later point, just happy to try to accommodate and answer those at that point. We have a short question here from Tang Nguyen. Do you have a detailed report for Southeast Asia? Nika, is that something you...
No, so basically the blog and the reports that the blog and the slides that we put together combines both South Asia and East Asia Pacific. We don't have a detailed report on specifically on which region they asked for, actually. Sorry.
Southeast Asia.
Southeast Asia only. So it's a combination of two. Obviously, the other thing that I have to caveat is that our survey is under a strict NDA, so we can't really share country level markets. I assume that your question is around being able to really deep dive into the region and show which markets, market by market, what's working and what's not working, and we are not in a position to do that.
And I think maybe I think it's if I can add to that answer as well. I think it's fair to recognize that within East Asia and Pacific, I mean, it is the ASEAN countries, sort of Southeast Asia, that is sort of the driving mobile money markets. Obviously, a lot happening in Myanmar and Cambodia, but we also see a lot of fintech solutions, of course, in Indonesia, with a lot of innovative solutions. I believe even Nika, you were out there not too long ago, looking at everything that the new fintech-driven solutions, what they're doing out there.
Exactly, but yeah. So we did as Simon mentioned, we did a live learning session, which was facilitated by Caribou Digital back in November last year, when we went to Indonesia and we looked at basically fintech players and tech giants who are driving a lot of innovation in the market. And it's a very different context to the vanilla East African model and to what we see in other markets across the region, such as Bangladesh and Pakistan and India. So we have to take that into account when we talk about how they're pushing this forward. I see another question from Dominica, who's asking about the newer fintech and other new mobile money offerings we've mentioned in Asia. If you can elaborate on that. So it's quite interesting. So what we saw more, for instance, in Indonesia was that there was more emphasis on creating a value prop for micro SMEs and creating a value prop for adopting these super apps rather than digitizing payments, especially when it came to merchant payments, micro SMEs, etc. Other parts of the business were under scrutiny to be digitized and to be made more efficient, such as the third-party logistics, how they basically source goods from FMCGs and so on. And that's a interesting strategy because the value prop was more on providing basically more revenue opportunities and faster access to products and goods to micro SMEs, rather than the approach that we've seen in the African markets, and in classic mobile money markets, where the emphasis were on adopting merchant payments and digitizing payments. So there wasn't that much emphasis on digitizing payments there when it came to micro SMEs and rural areas, and the emphasis were more on urban areas, on basically ride-hailing solutions, etc., which is a bit different from the classic mobile money model that we've seen. We have to see in a few years' time whether these providers can successfully and basically sustainably reach to the rural area in rural families and low-income households in parallel to the urban demographics that they're serving today.
Great, thank you. I think maybe I lost the point for just the general region. Obviously, we're watching Vietnam very closely and hoping that the mobile network operators will be able to really bring in the unbanked into the financial system as well. Now let me see, what else did we have? I have one question that is just what happened in 2018 on the line graph of Asia. I'm assuming that is referring to that's accounts, registered accounts.
Right, so as we kind of went through when we had a look at the breakdown of how many registered accounts were added to both East Asia and Pacific and South Asia, we did see quite a significant drop to the number of accounts added to South Asia in comparison to what we usually saw in years previous. So this was kind of down to the increasingly complex regulatory restrictions that were imposed on the Indian market in particular, which happened in 2019. So because of the enforcements that were imposed, it kind of economically and financially didn't make sense for even some of the larger players in the market to carry on operations just in terms of return. So we saw quite a few of the big players in Indian market to close down operations. So this included Aditya Birla Payments Bank wallet, and Vodafone's M-Pesa as well. So it goes to show that the regulatory restrictions affected both MNO-led and non-MNO-led. So India's payments banks models, the regulatory restrictions affected both kind of models. So that's kind of what hindered the growth in South Asia, and kind of what caused this dip off between 2018 and 2019 that we see on the line graph. But I guess moving forward, and we'll see with the new data that we get in, how this has hopefully increased due to more people kind of signing up to these services. India's made a great push now to make payments more digital because of the COVID-19 pandemic. So hopefully we see a bit of more of an increase in the number of accounts that are added for the following year.
Great, thank you. We have one question. Sorry, did you want to say something?
I just spotted something and I remember that I needed to caveat something. We have a question on the regulatory landscape, and we're asked if we can share our perspective on the regulatory impact across markets. Maybe we should have caveated this in the beginning. So we didn't cover the regulatory landscape in today's webinar. Our team has worked on mobile money regulatory index, which has been updated in 2019 and is live. You can access it via Mobile Money Metrics website. It's a repository of regulatory market assessments of 90 markets globally, with 20 markets from South Asia and East Asia Pacific. If you're interested in understanding the index better and what does it mean country by country, please do get in touch. But also I'm going to mention a few names. You can reach out to our colleague Sakshi Chada and also Brian Modiera for more information on mobile money regulatory index. Yes. So Simon, I think there was another question you wanted to highlight.
Yeah, it was actually that question I wanted to put to you, because I just shared a link now as well to the Mobile Money Metrics website, which includes the regulatory index, where you can compare the regulatory environment across mobile money markets. So that's available in the chat, which I hope everyone can see.
I think there was another question I saw on interoperability. I'm happy to take that as well.
Sure.
But I can't see it on the Q&A box. I think it's great that you've received so many questions, but I think it was probably maybe earlier that we covered it.
And we covered one on account to account, but I'm not sure actually if I can find another one on interoperability.
Okay. Yeah, I just saw it. Was there direct evidence of positive growth change in active mobile money accounts and or digital mobile money usage in markets that achieve interoperability between mobile money providers versus markets with no partial interoperability? That's a great question. And because we hear a lot of noise about mobile money interoperability being one of the bases of financial inclusion. And so far, we can say that interoperability enhances financial inclusion and reaching customers, but it's not a key driver for adoption of mobile money. What I recall is that A2A interoperability and also all of the basically cross-net and transfers that we saw were still a very small proportion of the basically digital flows in the region. Unless we do a very like-for-like analysis, I won't be able in a position to say whether that was a driver for digital transactions, but it's quite telling that this still the scale of these transactions hasn't scaled, and they're a very small minority of the overall picture of digital transactions. Perfect. Any other questions, Simon, on the
well, I think we had one last one. I think you kind of touched on it before. I mean, it's about are there different mobile money financial products products different from Asian markets comparing to Africa solutions? For example, loan products, microloans, others.
So we're talking about adjacent.
It's talking about exactly adjacent and more advanced services, and whether that's more prevalent in Asia. We're sort of running out of time, but maybe if you can give us a few sentences on this.
Maybe very true. It's still very nascent. What we've seen was 19 million worth of digital loans processed in June 2019. Over 17 million unique customers also saved via mobile money, and 47 mobile money enabled insurance services across 19 countries. So it still is very in nascent stages compared to Africa, but happy to take this on offline because we're running out of time. Thank you everyone for listening, and thank you, Simon, for keeping an eye on the questions. Thank you, Kavita,
no problem.
for the great opening and giving us an overview of the bigger picture in Asia.
Great. Yes, thank you, everybody. And if any questions, please reach out to us by email, and we'll be happy to get back to you. Thanks again. Bye.
Perfect. Thank you so much.
Thank you. Bye.